All right, greetings. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com. And actually, the website is pointing to a different website that corresponds to a new endeavor, a new community that my partner and I have created called Flip That Option. So, Cubicle Investing has really been subsumed by Flip That Option. So, definitely check out the website. Nonetheless, today is Thursday. It's January 25th. I have not made a video in quite some time, but for those who have been following me, as you know, I'm primarily a SPX 0 DTE trader. And so, that's what I've been trading. And I have continued to trade the SPX primarily, although I do trade other underlines, but the SPX is the underline that I primarily trade. So as you can see here, I'm in a trade. I have let me just go to the actual trade here. So as you can see here, today's expiration is January the 25th. It's a 0 DTE. And I'm selling I've sold 10 contracts at the strike price of $49.10. And I have bought 10 contracts as well, of course, at the strike price of $49.15, which essentially creates a vertical credit spread for those who are familiar with options trading. That's a vertical credit spread. As you can see right now, the credit that I took in, so I was able to capture a pretty large credit because I was able to anticipate the inflection point, or the point at which the SPX actually maxed out to the upside and in reverse, and so I got right above it and was able to get a pretty large credit. So the credit is 1460, and right now of that 1460, well, roughly I'm at 100% right now. And again, as I mentioned before, I do trade other underlines, and so this here is Moderna. I'm not Moderna, but Marathon. Marathon is a Bitcoin miner. I actually own 100 shares of Marathon from last year. And so what I've been doing is I just been selling cover calls against the 100 shares of Marathon that I own. And so Marathon is a Bitcoin miner. Shout out to the Bitcoin ETFs. I'm sure Bitcoin will be skyrocketing later on this year after the halving event. But nonetheless, yeah, so I'm in this SPX trade. And so one of the things that I help my Flip That Option members with is just understanding how let me close this, how the underlying or the SPX actually moves itself. Well, the average movement of the SPX over a period of time. And so what I did was I did some research looking at essentially 23 years worth of SPX data, right? And so I created these buckets. So this first bucket here is a move greater than or equal to 0, but less than or equal to 10. The second bucket is a move greater than 10, but less than or equal to 20, so on and so forth. And so as you guys probably know, who are traders or those who follow the market, is that essentially every trading session there are 4 pieces of data points that are collected. So you have the opening price, you have the high price of the day, you have the low price of today, and you have the closing price for the trading session. And so what I did was I looked at the over this period here, this 23-year period, the difference between the high and low for the SPX, and how many times did that difference fall into these various buckets. And so what I found was that 91% of the time that the difference between the high and low was essentially less than or equal to 50, right? So having that information, that gives me an idea. For example, if I was to look at today's price action, and this here's a 1-minute chart of today's price action, January 25th. The high of the day so far is 48.95, 48.98.15, and the low is 48.75. So if we look at the difference between the high and low, 48.98 minus 48.75, that's essentially 23 right now. And so that corresponds to essentially what you see here, where actually the majority of the time, the difference between the high and low is actually less than or equal to 30, right? And so here I'm showing over the last few days what the difference between the high and low has been. So on 19 Jan of this month, the high and low was actually 57, right? Versus, less than or equal to 50. But nonetheless, it's normally less than or equal to 50. So you'll get these outliers, if you will, like January 19th, where the high and low would actually be greater than 50. And so when I come in, so for example, if I come in, at 2 hours after the market has opened, and I see that the high of the day is at 48.98, then I know that if I, for example, go in here, type in 48.98 minus 50, then that gives me a reference point of where I need to place, or where I could potentially place my strike prices on the put side for a high probability trade. Why? Because the research has told me that 91% of the time that the difference between the high and low is less than or equal to 50, right? And so if I know the high already, which I do, it's 48.98, I subtract 50 from that, then that gives me a high probability position to, for example, to place my vertical put spread and have a high probability of walking away with the credit, right? So that's one of the pieces of information that I like to convey to my Flip That Option members to help them to decide. We actually call these levels. We don't call these strike prices, but nonetheless, yeah. So to have a good reference as to where you should place your vertical credit spread, whether it be on the put side, on the call side, and have a high probability of walking away with the money, right? So it's extremely important that you be mindful of how of these data points for these specific underlines that you're focusing on. And the reason why I only focus primarily on the SPX is because to me it's very powerful if you become very familiar and very intimate with one or maybe two products and how they actually move, and just use those products and do research on them like I have done, and you just make money with those handful of products. But I prefer the SPX because it's highly liquid, and the spread between the bid and ask price, it's always pretty tight, so have no problem getting in and getting out of a trade for the SPX because it's highly liquid. And the fact that I've done so much research on this one particular product and I've traded it for so long that it almost becomes like an ATM, if you will, because of just focusing on this one or maybe two products. So I would encourage you guys to, and some folks will say that I'm a one-trick pony, but that's fine because my win rate last year, 2023, for being a one-trick pony was 91%. So I won 91% of my trades. Why? Because I'm only trading the SPX. Now, oftentimes I will actually put on multiple trades on the SPX because, again, it just, I'm familiar with how it moves, and it just makes it really easy to trade something that you're familiar with. So this is my first video for 2024. I'll be making more videos like this throughout the year. And hopefully you guys, if you haven't already subscribed, definitely hit the subscribe button and also the like button so that you can be notified as to when I make these videos that will potentially help you in your trading career and hopefully make you successful like I have been over the last, I would say, practically, I've been doing this now for really over a decade now, but really been successful over the last 3 to 4 years.